Alright, good morning everyone. We are streaming today public. Uh, Obviously the previous 4 days it was for the members only, but typically on Fridays I like to open it up for the public and be generous, I guess. But for now, I was looking at the charts and wasn't super interested in doing anything. I just simply wasn't interested in longing, like this 5 minute flag up here, coupled with this order block. I just wasn't enticed to get long whatsoever right now. So obviously what we've been monitoring all week is the 2021/2022 high that we came up and swept, right? We had a nice immediate reaction off of that Wednesday, sorry. Thursday, notice it ends up being a relatively bullish candle here, but we caught 51 handles to the downside. See how that works? So let's go to NASDAQ. So you see how the candle looks, see how it closed? That's a very bullish up close candle, but we caught 51 handles to the downside. So let's go to the hourly time frame. That was this move right here. Now, I wanted to see, I was okay with this rally up. So let me fix that. I was okay with this rally up initially. I just wanted to see us fail maybe to take out this high. And then us sweep this high. So basically I was just looking for S&D divergence, right? We didn't get that. Instead, we actually got bullish power of 3, so we traded below the opening. 8:30 news release, we opened again below the opening, back into the original consolidation, and been trading higher ever since. So what I'm gonna do now is, obviously it looks like it wants to come up and make a new high here today. For now, what I normally do is I take this low to high midpoint. So this is just like when you're looking for inversion for value gap. So I'm going to be looking at this specific one right here. So clearly we're in a very deep premium. I'd prefer to see some type of liquidity being taken now that we're pretty close to this high here, but we'll wait and see what takes place. Once again, the only trading day, let me erase the stuff from yesterday. The only trading day that the Inner Circle and I had today was yesterday. Monday through Wednesday, 0 trades were taken. Every single live stream, we were just sitting through price. I guess I know it's not as entertaining when someone's not sitting there making money, but majority were patient and want to learn, so we still had people in there. But anyways, it's not about, you don't, I guess moral of the story is you don't have to trade every single day, and you can literally just have one singular trade, and that be your entire week, and that's all you'll ever need. Because Thursday we caught 51 handles. Why would you need more than that? That's more than enough. Most people can't even catch 51 handles in the first place, and you think that catching 51 handles isn't enough? But yeah, obviously it would be preferred to take a trade here since I'm, public and whatnot. But I'm not gonna sit here and just, try to force a trade just because I'm live. I see so many other live streamers do that. I'll watch them and they just they'll be like, yeah, well, I'm gonna stay patient here, but then 5 minutes later they're putting on a trade just because they couldn't handle themselves and they're live and they want to put on a show. So let me actually send out the link here. Good morning, everyone. Good morning, the Med, Demetrius, Super Toaster, Imitation of Life. Good morning. See, look, these guys were all these guys were in my live streams. All 3 days, and they stayed patient, and they came in Thursday, and what did we do? We all made money, and it was a good day, and we ended up closing on the day. And everyone that said don't trade December, it wasn't patient. They probably looked at the charts like, damn, that was a pretty clean move. Now, don't get me wrong. In terms of swing trading, this absolutely is. If you're a swing trader, this absolutely is not the ideal market to be doing so. I mean, you see, we had this very nice sell-off. Another nice sell-off. But then look, automatically, we come up, find support, make a new high, come down, go into new highs. So it's definitely not the ideal market. But in terms of intraday scalping, Thursday was A+ trading conditions. So let's check down, see what we did there. Oh, there we go. So let's see here. I'm preferring this high to get swept on one of the averages. I want to see at least one average be able to sweep the high. And then we're up into this breaker here on Dow, but that's not really likely to hold, so I'm not even gonna mark it out. So let's go to the dollar index. Okay, so dollar was finally able to come down here and sweep this sell-side liquidity pool. Let me check the daily. So clearly dollar index is eventually going to come down and run down this low. We have this weekly order block here, and you see how it's kind of just digging through it. And then keep in mind that we do also have this small weekly fair value gap. Now we may find initial support here, but I do think it's very likely to see lower pricing below this low. And then we'll take our dealing range. So this would be our discount sell side, discount order block, discount order block. Another level I'll be initially looking at is the opening of these two down close candles. So 2 levels I'm watching, this weekly fair value gap and these 2 down close candles. Simple. 15-minute time frame, we do have this very large wick left behind. I think it'd be likely to see that worked back in eventually today. Yeah, it was a decent PM session, but I mean, if we just go back and look quick, so the idea was I wanted to see continuation towards the Wednesday low that I called out yesterday. Obviously, that didn't pan out, but if we're going into the PM session, we see that we had that very nice AM session sell-off, but then we came back up, went into consolidation, so this would be our classic time distortion. Okay. And then we rolled into that lunch macro that then delivered us down to the downside. More time distortion within the lunch. And we dropped down to do what? Entice people to keep getting short. And then what do? We drive it up. At the optimal time of day, we come up. And then one more time, so it's kind of hard to see, but we engineer these highs right up here. And then finally right at post the initial PM session macro, which is 1250 to 110, we come up and sweep those highs. And then what I'm looking at is we had this change in the state of delivery, so below this up close candle, change in the state of delivery. I'm looking at that at the optimal time of day, and then I'm referencing this down close candle right here. Why? Because there's this high, low, higher high, We displaced below that. As soon as we come up on this candle, wick up into that, boom. Got short, and it got covered. There was a hourly imbalance midpoint I was targeting right down here. Also, obviously, this low. And I wanted to see us continue lower, but then you saw what happened. As soon as we came down, boom, came right back up. Consolidated, slowly worked higher. So it definitely wasn't the ideal day, but like, if you're not greedy and you know how to pick your shots, then you could have done well, like as I did. So let's see here. We did just trade into this daily rejection block here. So we traded up above the two clean bodies and into the wick, right? Let me see if I got that line accurate. So all you're doing for rejection blocks is using the highest body. So I'm monitoring how we came up and swept these clean bodies here, okay? And then Dow was able to do so. Okay, we were able to do it on ES. Cool. Now, deep retracements, there's always a chance for them to happen, but this absolutely was not what I was anticipating to take place. But obviously, as traders, we adapt, and we're not marrying biases. But it would have been ideal to at least see some type of resistance being held at the 79% optimal trade entry level. But anyways, if we're looking at the downside, it's kind of the same thing as yesterday. So we have this 8:30 news release, traded down. These lows here, not saying we're gonna come for them right away, but these lows are just way too clean. Came down, almost matched them. So we have this midnight low, London low, coupled with the 8:30 low. So eventually, I do want to see this swept, and then we also have this imbalance below it. So I'd want to see us reprice down here. And I wouldn't be surprised if we did just collapse today and came down here, just especially with how back and forth the market has been as of late. Also keep in mind that this is the week before the holiday weekend, so I wouldn't entice you to want to, you know, try to trade, I guess, because the Friday before a holiday weekend not typically, but has a high chance of doing, you know, some weird stuff in terms of price movement that we're not used to. No, I don't believe there is any news today. So I like how we had this sweep up. So we had this high, low, one more sweep up into the buy side here, and then we just displaced lower, and we're respecting this initial 1 minute gap. Now, one more thing I'm going to bring to your attention is we have sell side liquidity residing below this 930 low, and then we have this regular trading hour gap left behind. I want to see if we can reprice into that. Same thing with ES. Let me go to regular trading hours. See that? Now the only thing is I want to see us repriced at least to the low end of this 15-minute imbalance, because if we do that, that will signify weakness to me, and I'd be looking for shorts below these lows here and then this imbalance that I marked out. And then same thing for NASDAQ, it just doesn't look as clean. So we'd be looking at these relative equal lows and these lows, but there's no imbalance below it. So Alright, so I like how NASDAQ repriced to the low end. And I want to see us pierce through that and then come up and use it as resistance. So they're saying we have 10 a.m. red folder news. Let me double check that. Because typically if that were the case, okay, so we do have consumer sentiment that just dropped at 10 a.m. Didn't really do much. Obviously, as you can see. But yeah, as of right now, I'm just going to continue to watch and wait. There's really nothing I'm interested in right now. But with that being said, I'm going to continue to monitor throughout this entire 10 o'clock hour. And if we don't see anything within this 10 o'clock time window, then, you know, closing up shop for the weekend. And I'll be back to the inner circle, and I will be back Tuesday. And the reason why I'm closing up shop past 11 a.m. is because, once again, it's the holiday weekend. And it's typically not a good idea to be trading past that time with the holiday weekend. But anyways, there's no reason at all to expect shorts off of this right now, because all we're doing, it's just a retracement on the higher time frame. So for guys that you know just love to pick tops and be on the 1 minute time frame 24/7, they'll see this and they'll short this for VAGAP right away, and they'll start regretting it, right? Alright, let me hop on here and see what my friend Hydra's doing. He's streaming live right now as well. Come on, man. 30-second chart. Hey, it works for some people, but I'll never hop below the 1 minute, nor do I need to, because I mean, why would I switch up my system if I'm already profitable? You know what I mean? The second time frames are absolutely not required whatsoever.
I'm not gonna do it because see, I told you guys many times. You have to understand it.
Alright, that's enough of that. Let me focus on my stream. Anyways, guys, nothing I'm excited with yet, but I mean, it's still only 10:06 a.m., so that's not to say that we're not gonna take any trades here, because I don't know that yet. Good morning, Hal. Go ahead and write up that like button. We got 41 viewers and only 10 likes. That's very sad. Yeah, trends typically aren't what you should look for in trading. uh, Trend following both uh, in the physical charts and outside of them is not a good idea in trading. Uh, Stick with your own model. But anyways, at this point, it's just too deep of a retracement. I'm not saying it's impossible for us to trade lower from here, because it's not. That's why we monitor the lower time frames and what we do at higher time frame arrays, such as this hourly inverse right here. But it looks like at least one of the averages are gonna maybe come up and sweep this Wednesday high. Once again, prior to all of this movement here, I was not anticipating that to take place. I was anticipating maybe a stop rate up here, find support right here at the 79% retracement, but we didn't get that. And then remember, this red line is just the daily rejection block. That's all that is. So once again, we do still have sell side liquidity below the slow here. I'd want to see that swept. And then a repricing at least into this initial 830 gap here. But as of right now, there's just no reason to be trying to do anything right now, or being impulsive or anything like that. You guys gotta understand, whenever you pick your shots wisely, you're not sitting in the charts, you know, asking when's it gonna give me my next trade, because you know your model and you know it's gonna perform consistently. As soon as you see it, boom, take it, no hesitation. And yeah, you submit to it. But as of right now, if I'm just sitting here shorting 1 minute fair value gaps whenever it's 50-50 as of right now, because we have this Wednesday high that is very likely to be swept, and then we have this imbalance down here with sell side liquidity below here. Now, if I had to favor one side right here, I would say it's more likely for us to come up and sweep the Wednesday high, but that doesn't mean I'm going to trade it right now. And as a matter of fact, let me get this off my chart. Yes, sir, Ahmed. I'm glad you're learning. That's why I always say it's like the important part is not what profits I'm making and how many contracts I'm using. The important part is, are you learning from watching someone do it live? And yes, a lot of people are. To answer that question. So 10-11 a.m. once again, guys. It's the day before the holiday weekend. It wouldn't be smart to be trying to frame trades past 11 a.m. in all honesty. So for now, the only thing I can say is notice how we came up and made this intermediate term high above this daily rejection block. Remember, that's this red line is. And the rejection block is simply the highest body up here. So these two clean bodies came up and swept that. But as of right now, we're just in a consolidation, and yeah, no trades will be taken as of now. Now, if you're looking back here and you're like, oh, well, I mean, this was a perfect buy right here. Why were you not trading this right here? We had our 830 Judah swing to the downside, swept sell side, came up, back into the fair value gap. It's just not an A plus trading setup. Like, yeah, I could have made money on it, but why would I need to force this trade when I caught, what was it, 80 handles yesterday from the AM and PM collectively? Can I please explain the orange box? So it is, whoops, this hourly inversion for value gap. So from this price like here, all I did was take, so the original price swing that swept the buy side liquidity right here, I'm taking that low to the high, and then the one that is mostly correlated with equilibrium, that's the one I'm using. So yeah, that's why I got that there. Now, does that mean that we have to frame shorts off of this? No. It could obviously displace above it and then use that as support, and we can frame it that way. So it's not just being used for only one direction. So yeah, once again, yes, I'm streaming for the public today, but that doesn't mean I'm gonna come in here and try to prove myself and force some type of trade when I don't need to. That's, you know, entertainers like Patrick Wheel and them. They're entertainers and influencers. They're not, you know, they're not financial advisors or real traders. They're there to entertain and, you know, get likes and views. I mean, nothing wrong with that. They're making a living doing that. But whenever you come to a stream like mine, you're not gonna see, you know, that type of thing there. We're here to make money, nothing else, and close up the charts and go on about our day. But anyways, if we do keep this intermittent term high here intact, so this will just be a 1 minute fractal intermittent term high, so swing high here, swing high to the left, swing high to the right. The only thing that's gonna make me interested in this remaining a high is if we get massive displacement to the downside with speed, and then, you know, obviously a nice retracement. But other than that, I'm not really interested. So we can see we just had a 1 minute interswing SMT diversion, so we had this failure swing here on Dow, whereas NASDAQ was able to sweep out this short-term high. Same with ES, but for now this doesn't mean anything until we start disrespecting opposing arrays like this 15-minute gap. Then I'll be interested. Eric, which gap? Just this 15-minute gap. I would need to see the midpoint, so let's take the midpoint. So this price point right here, I need to see us displace below that with speed. Come up, use that as resistance. That would be the ideal scenario here. But what happens if we get displacement to the upside above this swing high here? I'll use this one. Then obviously my eyes would automatically draw to looking at the Wednesday high here. But also keep in mind we do have this large regular trading hour gap left behind. Not to say that they can't leave those behind, but it's never typically very smart to be longing with this sensation taking place here. So once again, guys, for all the newer viewers hopping in, we're going to be monitoring until 11 a.m. Past that, we're not looking at anything else because it's the day before the holiday weekend, and it's usually never a good idea to be trying to frame trades when we're about to go into a holiday weekend. Past 11 a.m. that is. But as of right now, the support we found. So not only do we have, let's go back up quick. Not only do we have this 15-minute gap being repriced to, we have, obviously the 5-minute as well. We have this 9:30 a.m. wick midpoint repriced to inversely. So we're not done with it once we trade above it. We're looking at it inversely. And then on the 1 minute, we have this large down close candle. Yes, I'm still looking at this as an order block. Why? Because it came down, swept the stops, completely displaced above that. Boom. Created this gap, created this small gap, and then we referenced the opening price and its midpoint. And you see the beautiful respect at the midpoint of this down close candle. So for the downside, what would I be looking at? Speed going through this opposing 15-minute gap right here, this pink shaded area, and then speed through the lower quadrant of this 1-minute order block. Let's check ES. So if we trade below this swing low here, then I would classify that as a significant shift in market structure, and I'd be looking at this low here, these lows here, and then obviously the 830 wick as well. So let me actually go ahead and mark that out, because this would be the primary target if we look for shorts today. Primary target would just simply be this midpoint of the wick here, and then I wouldn't be looking for any more movement. I'd just be content with that and, you know, let the holiday pre-holiday weekend do its thing. But yeah, see how we just came right back up, covered this entire price went lower. This isn't significant enough for me yet. Now, the only thing I can say is I am preferring NASDAQ's market structure over ES. So we have this very clean swing high here, swing high to the left, swing high to the right. Came up, swept this first short-term high right here. Now, let me go back to the dollar index quick. So dollar wasn't quite able to hit that opening of the 2 down close candles on the daily time frame, but remember what I said? This very large wick will be viewed as a gap, and we want to see this reprice to like a magnet. If I can get the line drawn out, there we go. So what do? We take our midnight high to the low, and what are we looking for? Well, we're below market price, and we're looking for signatures down here that would propel us up to the premium. Premium what? Wick. Okay, so the dollar index is actually looking good. We had 3 drives lower, so sell side taken once, sell side taken twice, 3 times. And then if we're able to displace above this swing high, we'd be watching this 5-minute candle, extend that out as a breaker, seeing if that can't propel us up to this price point here. You can also clearly see that the 950 to 1010 macro did its thing on the dollar. So we had a failure swing here, came up, respected this 1-minute gap, once again, boom. And I want to see some speed above this swing high here. Also, one more thing you can reference while we're going down is bring your attention to this breaker here. So I'm just gonna be watching this without the box here, but I just wanted to mark it out quick. So this high, low, higher high, and this down close candle we'd be monitoring. So yeah, still not giving me anything significant as of right now. Just keeps rolling back up after it trades down. So remember this down close candle, this order block. We just pierced through the midpoint, and I want to see a closure in the lower quadrant here. So we have a market structure shift on the 5-minute, and then we have this imbalance left behind, and then we have an opposing liquidity pool that we're looking at. And then also I'd want to bring your attention to this discount for value gap that I'd want to see your price to. So let's take our dealing range, the low that we made to the high. So we're above market price, and we're looking for signatures that would drive us down below market price. What's that? This discount wick. Same thing as dollar index. Just different sides. Yeah, just if you're comparing ES and NASDAQ, ES just is not ideal whatsoever when comparing it with the NASDAQ right now. So no discount arrays have been disrespected as of now. All we did was came down and swept these lows here. What's up, John? Good morning. So rather than discount rates being disrespected, we're actually respecting them and came down and swept these clean lows. So if we get meaningful displacement of this swing high, we'd reasonably expect continuation, and we'd expect this to stay open and then head for these highs here. Whoops. Honestly, imitation of life one. Honestly, you can just look at breakers. So if you have a good understanding of an order block, you have a good understanding of a breaker. It's basically just an order block. It's basically just an inverse order block. That's really all it is. So let me find an example here. So we have this low, high, lower low. So we came up, we made this low. This last up close candle, we view that as our order block, right? We came down, swapped an intraday low, but then we came up off of that and completely displaced above this order block. So that'd be a quote unquote failed order block. And then once we dropped back down into it, we'd expect us to accumulate orders at the opening, high, and midpoint to then propel us higher. So yeah, I'm going to be favoring, obviously, now a move above this high here. So let me just take this line off. And then this gap would act as a breakaway gap here. And let me check ES. Yeah, same thing. So we drop down to the very high of this inefficiency. Same thing, NASDAQ. Maybe I should have went public yesterday. Because so far, even still to me, I don't care about all this here, because there's no reason for me to be trading that, honestly. This entire up movement here. The only clean day, in my opinion, in terms of, framing something with high probability and having reasonable risk management, was yesterday, and that's all you'll ever need. You don't need to take any more trades than that. Anyone, all my inner circle members that were in the live stream yesterday, literally making money, and that's all you'll ever need just from that one day. Alright, so we have 50 viewers, but only 22 likes. That's pretty sad. Alright, so notice how we displaced above this swing high here. Same with ES, so I'm going to be looking at these relative equal highs right here. And then the Wednesday high. Also, if you take a look, we came down, swept this low, right? And we completely just displaced above this down close candle right here. So that'd be a change of the state of delivery on the 5-minute time frame. So yeah, guys, I'm not too sure with this price action here. I might just have to end the week on only 77 handles. It's just so funny seeing guys come in and, you know, you see guys on social media posting trades they made and stuff. And then they'll be, oh damn, why wasn't I a part of that? I should have took that trade. Fuck. Which is prime example of why you shouldn't look on social media, because then you'll subconsciously compare and you try to do more than you really can do, and it leads to over trading. And it's just funny how guys push so hard and their frequency of trades is so high, and they just want to make profits every single day, every single session, when the reality is almost 90% of over 90% of the traders that are actually profitable, their frequency of trades are actually lower than those who just try to trade every single price fluctuation. You can make a career on one trade per week. One good trade per week. You can make an entire career. That was my cats fighting in the background, if anyone heard that. So the classic thing in terms of classic price action that would take place right now is it comes up, matches this high, gives short sellers hope, drops down a little bit, and then comes through and slams right through it. That'd be the classic scenario that could take place right now that I would favor. But now, if we were to long here, this absolutely would not be classified as an A+ trading setup, because number one, we had this large regular trading hour gap left behind. Number two, it would be preferred. So naturally, if you're looking to get long, you'd at least want to see some type of discount market, right? Rather than trying to trade it up here. But yeah, obviously I'm expecting us to continue above this high, but I don't, honestly, I'm just not too excited to trade it. Now it's funny when I'll be in my streams or something, I'll get private messages and they'll be like, "What GK? What's going on? You were so confident in the trade. Why are you not upping your leverage? Why aren't you pushing more contracts? You're only using one two contracts, sometimes three." Well, that's just one of my rules. I never use more than two contracts, especially on the Nasdaq, which moves very fast. So two contracts with that one trade on Thursday was a little over $2,000. One contract with the Nasdaq PM session trade, almost 600, just under 700. So, like, I mean, that's more than you'll ever need. You don't need to push all of these contracts, because what if you're wrong? Because at the end of the day, no trade outcome is guaranteed. And anyone that says that's full of shit, because if that was the case, they would be pushing the maximum leverage they possibly could, putting their whole house on it, putting all their assets all on the line in that one trade. But they don't do it because why? It's not guaranteed. And that's why their stop loss is there. They wouldn't have a stop loss if they didn't know it'd be hit, right? So even though no matter how confident you are in your ability, it's never a good idea to push unrealistic leverage, because maybe you'll go on a streak where you're winning and it's all profits, but then one day everything comes crashing down, you get humbled with one trade. I saw a guy on Top Step interview or something, and they were showing all these profits to me, and I was like, oh shit, all right, yeah, it's actually pretty good, respect, that type of thing. But I kept watching, and they were like, yeah, this guy Alex, we gave him the account, and yeah, right off the bat he pushed the maximum 15 contracts, and as soon as I heard that, I was like, okay, all right. And I don't know what that guy's doing now, but clearly the humbling is coming soon, and he's not gonna like what happens when he's on the wrong side of the marketplace pushing that many contracts. So I've seen guys have fast run ups, trading unrealistically, trading unrealistic leverage. I've seen all that, but every single time there's a common theme, which is they eventually blow out. And long story short, it's trading that way is a low sustainable fuel. There's no reason to do it. It burns out very quickly. Anyways, guys, no, I'm not shorting this. If anyone's sitting here wondering, no, I'm not doing that. I mean, just look at NASDAQ. It already came the whole way back up. Yeah, guys, honestly, nothing in here that's... I mean, obviously. I mean, just look at what took place. Slight SMT, you say? Let's check. Oh yeah, okay. I wouldn't consider that whatsoever, though, honestly. But I like how we dropped down and left these highs intact, and then I want to see it get swept. But we weren't even able to run out these lows here. We just came down and matched, which wasn't the ideal scenario. But I want to see us at least drop down to this down close candle and this imbalance. But we didn't get that, so Hmm. Let's see what Dow did. Okay. So the Dow index is looking good for the upside. Obviously, I said, what did I say? I said once we displace above this swing high, we're going to be watching what? This up close candle as a breaker. And it just so happens, what did we do? Displaced above it, immediately wicked right down to the high end of it with this coupled with this imbalance, and boom. Trades right up off of it. And let me see if I got that accurate. Yeah, I did. Okay, there we go. And what's the target? Well, we have this. Yeah, I don't like how that looks. This premium wick. I want to see that repriced too. But then there's not that we can, this isn't any help to us, even though we're easily able to frame higher pricing on the dollar index. There's nothing we can frame inversely on the averages here. So right now I'm just watching this down close candle opening. And then this tiny little gap here. I want to see us propel above this high right here. And then once we do that, I'll monitor and see what we do. If we don't, if nothing takes place after that, then obviously I'm closing up the charts for the day. And it is 5 minutes until that 10:50 to 11:10 macro, so obviously I'll monitor that if nothing sets up. Close the stream, go enjoy the rest of our day. And we ended the week only trading one singular day with 77 handles. But yeah, anyways, guys, like I was saying earlier, unless you have social media for learning purposes, or trying to grow a business or something like that, there's really no reason to be on it as a trader, because even if you don't think it is, subconsciously it's making you compare and try to do more than you can actually do. When you don't know how far along that person was, you don't know how long they've been working on their craft and whatnot, and you're sitting here trying to compare your results to them, and you don't even know if they're real or not. Half the shit is fake. So it's better to just not waste your time looking at that stuff. And I always say the main problem with people showing after the fact recordings of trades, after the fact executions, that type of thing, the problem with that is they could have taken 20, who knows how many losses they took before they showed you that one win. You know what I mean? They could be using multiple accounts, multiple laptops. Probably isn't even real money. It's probably demo. So there's lots of ways to manipulate you into thinking that someone's profitable when they're not. So if you have someone doing it live consistently, there's no way to fake that. So there you go. So 2 more minutes into this macro, I'll monitor what we do within this macro. If we get any type of significant movement, if I'm able to key anything off of that. But if not, once again, just close the charts for the day. One more minute. Let me go to the 5 minute. I don't want to just keep hanging around here. So it definitely would have been preferred to see one of the averages to sweep this high here, but isn't happening. So, not to our surprise, we almost completely delivered the midpoint of this wick here. But remember, before we even started moving higher, literally when we reached this price point here, I was bringing your attention to this wick here. It's unfortunate. This would have been a whole lot more satisfying if we were able to frame something inversely off of that with the averages, but we weren't able to as of yet. So here's this macro rolling in. So today's price is kind of reminding me of what we sat through on Wednesday, but then in the PM session, obviously we had a very nice sell-off that I was not a part of because I closed up the charts for the day, which, I mean, I'm completely fine with that. Hmm. Well, not the ideal price action for a public live, but I will sit here for about 20 more minutes and leave it at that. Man, this price action is depressing. Now you look at other guys stream, they'll be getting irritated because they can't put on a trade, and that just shows unprofitability because they're not looking for any specific model. They're just looking for fast movement, and they just want to sell long or short based on what that is, and that's gambling, not trading. So we're bumping into the low end here of, oh, wrong time frame. Bumping into the low end of this 5-minute gap. Now we had a failure swing here. This failure swing would be more significant to me if one of the averages were able to come up and sweep this high. But anyways, we had displacement below this 5-minute imbalance, below these 2 up close candles, slightly dipped into this 5-minute gap, and now we're trading up lower off of the low end of this small 5-minute gap. Now, in using inverse gaps like this, so using inversion gaps are only significant if time aligns with them. So typically the only time I'm looking for framing trades off of inverse gaps is after buy side or sell side has been swept. Then I would look at inverse gaps. So very important what I just said there. Alright, so we got some movement here. Out of this consolidation. There we go. Finally got that drop down we were looking for, huh? So sell side liquidity below here. And then I want to see us drop down into here. And if it really gets lower with speed, we'd be looking at this midpoint of the wick right here, and obviously the opening price of 830. So target 1, target 2, target 3. And then same thing on ES. I want to see this low being swept right here. There you go. And then remember what I said. Watch this 15-minute gap. And we'll watch the midpoint. We're going to see a real speed below the midpoint there in a closure. So let me actually I'm just going to mark it out just so I can reference it on the lower time frames. There we go. Alright, so notice how we dipped up into this 1-minute gap with this imbalance. I obviously just missed that, but it's okay. I don't want to chase it. So what I can do actually, I want to see it roll up into this wick inversely. So I want to see the sell side reprice to. Boom, almost. Got it on NASDAQ. And the 15-minute gap repriced too. So I wasn't really expecting anything crazy to happen here, but obviously we're within that macro. We had a roll up into this 1-minute gap. I would have shorted that if I was there real time, but it just snapped up and I didn't really want to chase price. But yeah, all the levels I wanted to see reprice to. Now we're looking at 8:30 opening and the midpoint of this wick. Simple. And then the sell side below here was just swept as well. So we'll take our fib. We reached 62% retracement level discount. And depending on what we do here now, we may be able to frame some type of continuation higher. But for now, I'm going to monitor what we do now that we just dropped down to these key discount arrays. Okay, so down looking good. Sell side was delivered here on ES. Nice. GSN Duke, looks like you guys caught that. Good job. So patience pays until it doesn't, right? I wasn't looking at the 1-minute time from here. Obviously, if I was sitting here collectively, I would have shorted. One partial would be here. Second partial, midpoint of this 15-minute imbalance. So I do want to see if we can get some type of market maker model form right here. So we have these relative equal highs up here. We had to drop down into a discount. But I would need to see some type of failure swing down here into the wick. And then one of the averages maybe make a low. That would be preferred. So notice how being right isn't always equivalent to being profitability. So I called out all these lower levels ahead of time. I just wasn't able to grab that short there. So this right here could have been, let's see, 711. Realistically, I'd be targeting the midpoint. So yeah, good amount of handles there. So right now, once again, I'm monitoring to see if we can't make some type of failure swing and set up a S&P divergence at the discount price point we just delivered. Is the pink box a breaker? Are you referring to NASDAQ? Because if you are, no, it's not. It is this 15-minute imbalance here, which I can actually erase. Let me get that off the chart. So once again, the preferred movement that would take place here is we see some type of failure swing. But as of right now, let me put on the regular trade narrow gap. So we also multiple discount arrays we delivered sell side, this inefficiency, and then the midpoint of this regular trade narrow gap. So this closure and then this opening, we delivered exactly to the tick, the midpoint. So I want to see at least one of the averages slip below and make a low here. Now, to anyone that just made money watching my stream, looking at these lower targets that were called ahead of time, does it matter what we do now? No. You should close your chart and go enjoy your day. But for now, I'm going to see if I can't key something off here. Also, notice on the other end, we have this main target that we're looking for on dollar index delivered. So let's take that midnight high to low. We're up into a premium midpoint of this wick. And then I'd also be looking at this. Alright, so NASDAQ just shifted into a new low. Nice. So the only trade I would have taken this morning was obviously not here. I like the NASDAQ's market structure better, so I would have shorted this. And obviously all these levels are caught ahead of time. I like how we just came down, made a new low. And I'd like to see us displace above this up close candle and see if we can't use this as a breaker to then take us up to these relative highs. And what is this? This will be our classic market maker model. So once again, all we're doing is taking the 830 low to the high that we made. You can see that we dipped down into a discount. So I'm not saying that's the case here today, but a good way to be able to frame lows and highs a day with a higher probability is you look at dollar index and you see if we reached a key higher time frame level. We did. And then we'd be looking to see if we reached a key level on the averages as well. So we do have that taking place here. But a lot of days that's a good way to be able to frame lows and highs being made. And then obviously you can look at bond yields and all that, but all I need is the dollar index, honestly. Now I do reference bonds and yields, or bond yields throughout the year, but whenever we get to, you know, towards the end of the year, I'm not really looking at it. So obviously we'd want to see us retrace into this 5-minute imbalance, but I want to see us retrace into it and continue on past it and maybe go up and sweep these highs. That would be preferred. But I'm not going to entertain anything unless we get some displacement above this swing high right here. And then we'd be looking at this up close candle. So we do have a low made. And then we have neither of these averages wanting to make it the lower low. So we technically do have SMT for now, but it's not solidified until we get that displacement. How do we trade days like today? Well, you just scalp it. Simply scalp. In my opinion, the only high probable trade, for at least for me today, was this dip up into this gap right here. This inverse wick, send that out. And then just simply getting covered at the midpoint of this 15-minute discount imbalance. And then just leave it at that. And that was the only thing that I would be interested in scalping today. But also you said... Not also says, can you tell us how to approach leverage on futures with a 50K funded account? Me personally, I don't use any more than 1 to 2 contracts. And yeah, that's it. No more than 1 to 2 contracts, and it serves me well. So, and I think it'll serve you well also if you do it. So. Now, if we have a daily, if we're in sync with the daily time frame, hourly time frame, and it's A+ trading setup on the lower time frames, then you'll see me sometimes push 3 contracts. But other than that, no more than 1 to 2 contracts. There's no need to push for more when you don't need it. All you need is consistency. That's it. You don't need fast run-ups and huge trades. You just need consistency. Alright, so we had that low made, we had the SMT, and now we're watching what? This up close candle. Now, I'm not interested in shorting now that we delivered all these discount rates and we're seeing what we're seeing here. Obviously, I'm not interested in that. Now, classic retail will see this, double top being made, and then they see the lower movement, and naturally they just want to get into there, and they want to keep shorting once we retrace into this 5-minute gap. That's not what we're anticipating. Now, the only opposing factor to my idea right now is we have a large wick being left behind, so let's go to the 5-minute instead. But I think that would be permissible to leave this behind, especially since we overlapped it here. We are in 3 5-minute fair value. Yes, we are, but I want us to see if we can disrespect that and continue on. And then we'd be treating this as a market maker model. So we came down, made a low at a discount array, multiple discount arrays. We have this original consolidation high with buy side above it. And then we want to see that come up and sweep that. So this is the only thing I'm entertaining before I end this stream here. Nothing else. I have difficulty making better risk to reward trades. I have 60% win rate, but my risk to rewards average is 1.25. Once again, any advice on how to make better risk to reward? Once again, it's all about consistency. That's really the only thing that matters. Making your wins bigger than your losses. But I mean, risk to reward. I mean, I think looking at that is kind of overrated. It's not about the risk to reward. All you're looking for is your personal model. You're looking at a precise entry point at a premium or discount array, and then you just need a reasonable target. If you don't have anything you're targeting, then what are you doing? So I'm not coming into the charts looking at, all right, this is gonna be my RR here. I'm looking for this and that in terms of risk to reward. No, I'm looking at specific premium discount arrays to target, and then my stop placement is always 5 handles. So, and the reason why my stop loss is never more than 5 handles is because if I'm going 5 handles in a drawdown, I don't want to be in the trade anyways. I'm probably on the wrong side. There's no need to have a wider stop than 5 handles. Once again, this blue shaded area, this is breaker right here, okay? Yeah, five handle stop loss. Alright guys, so here's what I'm going to do. Market maker model would be preferred here to come up and sweep these highs. Keying off of this discount. That was repriced too. But as of right now, I'm not going to be trading it. But I'm just going to go ahead and close up the stream here. If if we're able to have displacement, sorry, wrong time frame, reasonable displacement above the midpoint of this 5-minute gap, and then some type of order block to trade on, I'll alert it right away in the Discord, and I'll be taking the trade, obviously. But before I end the stream, I'll sit here for five. I'll give you 5 more minutes. But basically, I would just be looking at the lunch macro to maybe deliver this. If not, it's not a big deal. Yesterday was all we needed. But for now, bring your attention to. So we have this order block here. So all I'm doing is drawing a box from the high and the opening. That range right there, extend that out. You can see how we've been respecting that with the breaker here. Anyways, guys, that's what I was looking at. I'm going to go ahead and close up the stream here. If I see anything that I like in terms of coming up to sweep these highs, I'll be alerted in the Discord. With that being said, thanks for watching, and I'll see you all Tuesday.